Hello friends, welcome to my channel and welcome to another session of USA Weekly Market Report. Now, as you have seen, the overall month of September has been very volatile, and the first trading week of or trading day of October has shown some of the big gains that we can see on the Wall Street. And it's been seasonally proven that October has been a good month for equities. So the stock has moved in the same way. But there are lots of things that you need to understand apart from this, because one day move can't change the entire thing, and volatility will persist going forward. Now, if you are checking at the news, which is important, I think this Dow climbs 480 points, and Merck is one of the companies uh, which has performed quite significantly higher after its oral COVID pill. Now they are saying that the hospitalization rate will be reduced by 50% if this works out. So death by half for some patients. So the thing is, if there is a pill which is available in the market, you can just swallow it. Now, this is one of the things that is, I think, is very good for the economy. But there are other things that you need to taken care of. Apart from that, uh, you have Eurozone inflation, which is actually a concern because it is standing at 13 years high. And most importantly, you need to understand one thing, that when the energy prices soaring on the upside, and more specifically when winter is approaching, and because the transportation cost will increase, so does the inflation across products. So you need to be very much cautious and careful. It's not about the story of Eurozone, because each and every commodity is tradable, and if you want to purchase that, you need to pay the traded price that has been settled between the buyer and the seller. So you will definitely have an impact on your winter shopping or your Christmas shopping going forward. Doesn't matter whether you are in Europe or USA or any other countries of the world, because the overall energy prices have been hitting higher and higher going forward, and we haven't seen any respite yet as far as the prices are concerned. Now, one more thing apart from this is the Evergrande crisis, which is still there, and sometime people remember it, sometime people won't bother about it. But this is one of the things that one must not forget, how this saga has been playing out or will play out. And this news that Goldman flags 8.2 trillion dollar worth than China Evergrande. So there are some things which time will tell, which nobody can understand. Even if you are saying that we don't have any direct investments in China, sure enough, you don't have. But because China is the biggest consumer of commodities, and in some of or for some of the product, it solely consume 50% of the global consumption. So it definitely going to have an impact on the overall prices and how it's going to move. So somebody is going to make money out of it, and somebody is going to lose. So this is one of the thing. Let me read one para for you. So the most worrisome such blaze, say analyst at Goldman Sachs, is surging local government debt that the president Xi Jinping's men have done their best to hide. The default troubles at the globe's most indebted property development seem like small embers compared to the $8.2 trillion worth of local government faced financing vehicle outstanding. and that's just the LGFVS we know of. The data that Global McGee's V highlights is as of the end of 2020. Clearly, the tally is higher now, perhaps markedly. 10 months ago, these shadowy investment schemes had reached 53 trillion yuan, up from 16 trillion yuan. So, this is a significant jump. As you can see, it is more than 200% jump. Okay, and $2.47 trillion in 2013. So this is going up like a very fast trend, and they now amount to roughly 52% of China's GDP, topping the official amount of outstanding government debt. So there are lots and lots of pros and cons. If you want to look at the pros, that's fine, but there are some very serious risks which are available in the market that you must not ignore. And these are the final closing as of October 1st, Friday. Now, DJIA closed 482 points higher, whereas Nasdaq closed 118 points. S&P closed 49.5% higher. Gold 4.3 points. Oil is definitely trading higher, above $75. The big movements that we have seen in the last 1 week is or are the bond yields. They are moving like anything. Let me show it to you how this has moved in the past. So as you can see here, how it has moved and then fall down to 1.14, and right now it is at 1.16. So it's again been on the uprise, so that we need to actually focus on. Now VIX is moving up and down, but overall the VIX is above 20 is not a good sign. Okay, it need to sustain below 20, or in case of United States of America, it should be below 15. So you need to be a bit more cautious as far as this VIX and 10-year and oil is concerned. As I told you, energy prices will push the inflation further on the upside that nobody can count on for the time being. Okay. Apart from that, you have US dollar index, which is quoting at 94.07. So last month till September, 93 was a very big resistance. Now as it closed above 94, and the way it has proved itself, as I showed you in my previous week's video, go check it out. How or what I have said about the dollar index and how it is approaching, and the pressure is building up that it's going to move on the upside. So 94 finally happened, and this is also a bad sign as far as equity is concerned. So let's dive into the charts and see what's happening over there. So there are very mixed data. Some are slightly positive, some are very negative, and we need to focus on each and everything. So this is the chart of Dow Jones. Now my concern is not about this 400 or 500 point move, but what these moves. So you can see since May 2021, the overall chart or the price pattern is completely flat. You won't gain anything out of it. So as you can see over here, there is a flat trend. So the index is moving in between 33,300 and 35,088. So this is the range in between which the Dow Jones indices has been moving. So this is completely flat, but what is the threat over here? For that we need to go to the indicators. Maybe it is not reflecting much, the daily chart, but if you go to the weekly chart, there you can see that how this MACD and what it is in indicating. It's a complete negative divergence, and it is moving towards the lower end of the range. Okay, as apart from that, if you're looking at the monthly chart, here you can see the RSI, which is completely showing the negative divergence. So the concern over here is we need to see how this is going to play out, because what has happened in the daily chart for the past 4 or 5 months is now impacting the weekly as well as the monthly chart. So when you have this kind of things going on, you actually need to wait, because these kind of movements indicate two things. Either we are on for a big correction in terms of price, or else in terms of time. Okay, so both the possibilities are available. We need to see it's going to be a time wise consolidation or it's going to be a price wise correction. So that's two things that we need to understand and remember as far as the trend is concerned. Now we stuck ourselves to the daily chart, where the levels you have here is something like this. You have 33,281 as your stop loss. You have 33,782 as your immediate support, 33,782, and the target or the upside is 35,136. So this is a range in between which the stock is trading, and we need to see how this will shape up, because the way this has formed till now, it looks like a formation or probable formation of head and shoulder patterns is on the way. Okay, so this is your shoulder and this is the head, and we are probably in a formation of the another shoulder before it actually started falling down, or else we are in a consolidation which is time wise, and it can go for the next 6 months as well. That we need to see. Okay, now the weaker end of the puzzle is nasdaq. Now nasdaq is all about high beta movement and high beta positioning, and if the bonds are higher, if the dollar index moving up, nasdaq is going to underperform, and tech companies are not going to perform much on the upside, right? And if you are looking at the price chart of nasdaq, you can see here how the chart has performed. So this is the line chart for as far as the daily chart is concerned, and I think probably these are the levels which you need to look at. Okay, let's go to this. So this is what you can see. Now as far as nasdaq is concerned, you see there is a clear breakdown that has happened in this particular chart, and yep, so this is the breakdown that has happened in this particular chart, and we need to see how this is going to move. So here also you can see the same thing that has happened as far as the weekly chart is concerned. You can see this negative divergence, and this has been happening for the last 1 year. Okay, so the momentum is moving down and down, then we can flats, and again it is on the downside. And the same thing you can see in the monthly chart, more specifically in the MACD, how it has moved. So if you are looking any chart, whether you are talking about S&P, Dow Jones, or Nasdaq, the bad thing I would say that has happened is now it is impacting the longer term charts. Now, each and every chart has its own way, movements and directions. Now, if Dow Jones is consolidating, doesn't mean that it doesn't mean that everything is going to consolidate in the same way, as Nasdaq looks much more weaker than the other indices, right? So this is the weak end of the puzzle, and we need to see this bounce back can go up for, you know, 3 4 or 500 point, but that does not change anything. That's the important thing. Now, the things which are creating problems in the market. So this is the chart of dollar index. As you can see here, this is the daily chart, how the index has moved in the past, and breakout has already happened above 93.47, and there are some resistance levels in between which the stock is currently moving or trading. Now, here we are, and here it is. So you have some of the hurdles that you need to look at, but overall the breakout has happened above 93.75 and 93.47. So this will be your support on the downside. Don't go below these two levels. And the upside for the time being is restricted in between 94.32 and 94.79. So the only thing which we need to understand here is this: if dollar index started moving above $95, then there will be a big problem, because the next target we'll probably look at will be near 100. So that's going to be a very big or very important event that is yet to be seen. Now let's go and check it out, the bond yields and what are happening over there. So there is a significant rise that has happened. So from the lows of 1.13, it went up to 1.59, 1.55. Right now it is quoting at 1.46. And as far as the movement is concerned, so breakout has already happened above 1.38. So this was the level where the breakout has happened, and as you can see here, so this is the move. This is the move that creates a big sharp uptrend in the shorter run, although it comes down quite significantly from 1.56 to 1.46, but anything if it continues to trend above 1.38, it definitely be on its upside, and the uptrend is on for the time being. And these kind of movements are not happening in a hollow. There are some significant base beyond that, and that's why the bond prices, in this case the bond yields, are moving on the upside, where you have your previous high or the recent high of 1.76. So you need to be skeptical about this as well, and this implies to all the bond yields. Now, apart from that, the important, or one of the important pillar for this movement is what is happening in crude. So this is the price chart of WTI futures. As you can see here, there is a time in 2020 where it actually traded in negative, and right now it is holding strong and it is looking for a breakout. So one thing leads to another, and we are in some serious problem if the oil is going to move further on the upside. It definitely have a big impact on the overall inflation. Now, if you're looking at the levels, we are now looking at two important levels, 76.81 and 79.42, which means 79.5. If WTI crude futures crosses 79.5, it will be considered as a breakout, and beyond 79.5 you have two or three levels to look at, starting from 109, then we have 114, and you have 147. So these are some scary numbers, but if you are looking at this trend line, you can see a breakout that has already happened. Okay, so be prepared for any such big moves, and the kind of supply blockage we have here right now is definitely going to create a negative impact in the shorter run. So until and unless the global supply works started working smoothly, or at least 70 to 80% of the normal capacity, this is going to increase. This is definitely going to increase, and the oil producer have their mojo back, and they are going to reap their profits, because they are in troubles for the last 12 or 13 years, because the oil prices has been moving, or has been on the lower end of the range, where some negative oil prices has also been seen in 2020. So now is the time when they have their profits back from the market, and they are definitely going to use all the tactics to do that. So the simple point to understand here is, don't don't make yourself fool by this 300 or 400 points, because there has been enough pressure in the market, or enough points which I have discussed with you, and this will have their own impact. And for the time being, if you are looking each and every chart, if you are talking about Dow Jones, S&P and Nasdaq, they have disturbed long-term charts. Their weekly and monthly chart definitely get impacted in a big way. So there is a chance, a very high probability, that either we are on our way for a big consolidation which is time wise, or a big price correction that is yet to be seen. So if this something is happening right now, 300 and 400 point, just for the sake of the month of an October, which is seasonality, then this is not an argument which you can or we can debate upon. So make sure what is actually happening, and what one should prepare for. Let's see how these things shape up going forward, and till then, just observe the market, and next week we will reanalyze it again. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.